Hobby losses after tax reform, better known as TCJA. So here are the resources for today's video. They're also going to be in the show notes. There's plenty of links. There's actually some really good articles here to read if you're so interested. I'll point to the top tax court cases of 2018 written by Tony Nitti on Forbes.com. Great article. Really, really smart guy. So he's somebody to follow if you're interested in tax stuff, if you're a tax nerd like me. Hobby losses. This is what we're going to be talking about today. Actually came from a question that I had a few weeks back. A client that came to me. She has a horse business. I'll leave it at that. We got to talking about whether or not her losses could be deductible from that business, if it even was a business. Living here in the low country of South Carolina, we have a lot of folks who own horses. So this is kind of a popular topic. We've got some rural areas. We've got some a lot of stables around, and so this is a question that comes up quite frequently, and it definitely comes up a lot in the horse world. So what's up, everybody? My name is Chris Hervochon, the SOAR, A Better Way CPA. Let's connect. Chris at betterwaycpa.com. That's my email address, 843-608-0298. That's my phone number. Feel free to call me. Also on Facebook, LinkedIn, Twitter, and Quora, where I post new content every single day. And if you watch this show regularly, you'll notice that there's an Instagram and a Pinterest logo on here now. How many accounts do you know that are on Instagram, let alone Pinterest? Well, here I am, right? So go check those out too. Take a look. Let me know what you think. And there's new content that's getting posted on there all the time as well. So I'm everywhere. If you have any questions while I'm going through this, by all means, please ask away. Put them in the comments. I'm happy to go back if you're watching this on a recording and answer any questions that you might have, but happy to engage as I'm going through this. Okay, so here's the problem. So you're carrying on an activity. I didn't say business, I didn't say hobby, but it's an activity. And let's say it's a side hustle. So you're making a couple bucks coming in, but it's kind of like a hobby. You really like it, whatever you're doing. And you want to know if you can deduct those losses on your tax return. Let's talk about it. So what's a hobby really? It's something that you enjoy, obviously, but it doesn't have a profit motive attached to it. So that's the difference between a hobby and a business. One has a profit motive, that's a business. One does not have a profit motive, that is a hobby. Now, it is possible that you can enjoy a business. It's possible that you can enjoy a hobby. I'm not entirely sure if it's possible that you cannot enjoy a hobby. That would be kind of weird. I don't know why you would do that. So anyway, so are losses from conducting a hobby deductible? The answer is no, they are not. You cannot deduct losses from a hobby. So what are losses? Well, losses are revenue minus expenses. If your expenses are greater than your income, the money coming in, you cannot deduct those. Fair enough, right? That's what the IRS says. So maybe we're not talking about losses. Maybe we're just talking about expenses. So things that offset the revenue that's coming in. So let's say you're a basket weaver. You like weaving baskets. You sell those baskets for $20, but the expenses cost you, let's say, $15 to make those baskets. Can you deduct that $15? The answer is no. Why is that? Well, TCJA, the Tax Cuts and Jobs Act of 2017. Basically what happened was they got rid of all the miscellaneous itemized deductions. Well, miscellaneous itemized deductions, there was a 2% floor. I won't get down into the weeds here, but that's where hobby expenses were deducted in prior years on your tax return. Well, those have gone away. So in effect, you can't deduct any expenses related to hobby income. Okay, easy enough. So where is this in the IRS code? Section 183. You can Google it. There's actually a link to the Cornell Law website, which has the code right there all written out. You can go ahead and read it. It's fairly short. It's an easy read, but it is informative when it comes to this topic. So what you really want to do is establish a profit motive fact pattern if you're going to try to deduct losses or expenses related to this activity income. So there's 9 tests that the IRS talks about. One is the manner in which the taxpayer carries on the activity, and is it operated like a business? I'm going to go into this in a couple minutes, so I'll put that to the side. So what is the expertise of the taxpayer and their advisors? So are you hiring people who have a particular set of expertise to help you run this activity, to help you operate this activity? Are you hiring an accountant who's got expertise in this area? Are you hiring consultants? That sort of thing. How much time and effort are you spending on the activity? That's pretty self-explanatory, right? What expectation do you have that the assets of the business will appreciate? So if you expect that they're going to appreciate and you have that reasonable expectation, then generally speaking, that's going to fall into the profit motive business type activity. If you're just kind of writing these things off as a sunk cost and you're just doing it because you like it, plenty of examples of that. I want to say horses, but I think horses kind of appreciate. I'm not too into the horse world, but you get the point. If you think that they're going to appreciate in value, that's a profit motive. So what's the success of the taxpayer in carrying on other activities? Do you have experience in other businesses where you've been successful or not? What's the history of this activity? So has this particular activity made money in the past? Has it generated a loss in the past? Have you ever generated any income in the past? What's the history look like? If there are profits, are they substantial? So are they enough to sustain you, your family? Are you paying your bills based on the revenue that you're getting from this business or the income that you're getting from this business? What's the financial status? So how are you doing financially? The IRS will look at that. And is there an element of personal pleasure? Like I said, with a business, you can enjoy your business. That's entirely possible. Me, personally, I love my business. I love doing my business. I love trying to build a better mousetrap. So I can like it. That does not mean that that is a hobby, right? I am doing this for money. So that's an example. So back to number one. I told you I was going to cover this in a little bit more detail. So the manner in which the activity is conducted. So is there a bookkeeping or general ledger system? Basically, are you tracking the revenue and expenses in something like a QuickBooks or a Wave or a Xero or Excel spreadsheet for that matter? Or are you just basically swiping your credit card, shoving the receipts in in a shoebox and putting it under your bed and calling it a day and saving those for tax time? So if you have an accounting system that's more formalized, that's kept up to date, that's bullet point number 2. Is the information being kept up to date? Are you using that information to make decisions? If you have that, that is helping you to establish a profit motive. You wouldn't do that for a hobby. For a hobby, you don't care if you're losing money. You just want to go have fun, right? And an example that I put there is the QBO audit trail. So in the event that you ever had to make this case to the IRS and you were using QuickBooks, you could provide as evidence the fact that QuickBooks is being updated on a regular basis. QuickBooks Online has a audit trail, so you can go into every transaction. You can see when it was updated. You can see who it was updated by, and so you could say, "Hey, look at this audit trail. I'm updating this regularly. I'm keeping this up to date. I'm using this information." Are there separate bank accounts? I talk about this all the time with my clients. Don't commingle. Not good. Terrible idea. It's the worst thing you can do. But for this activity, if you're trying to establish a profit motive, you should have a separate bank account. That separate bank account should be linked up to QuickBooks, right? So you can have that bank fee come in, and then by extension, you're showing that you're updating QuickBooks on a regular basis. That's helping to establish that profit motive. Are you doing budgets and forecasts? Are you following those budgets and forecasts? This is not critical, but it is a fact. A fact to help you establish this fact pattern. Is there a formal or informal business plan? So are you following some sort of a plan, or are you just kind of drifting in the wind, right? And are you keeping meeting minutes? So are you meeting on some sort of a regular basis? Are you tracking who's coming to the meeting? Do you have meeting agendas? Do you have meeting minutes? That sort of thing. That helps you to establish that you're running this like a business. This is more formal than just a hobby. So last thing I'll talk about is a safe harbor. There is a safe harbor here. So usually the burden of proof is on you to prove that this is a business and not a hobby. Now with the safe harbor, that shifts the burden of proof back onto the IRS. So what is a safe harbor? If you've had a profit in 2 of the last 5 years, if you're just that's most activities, or if you've had a profit in 2 of the last 7 years, and generally speaking, this is where horses are involved, right? That's a tough business. But if you've made money in 2 of the last 7 years, you can qualify for that safe harbor, and then you now shift the burden of proof back on the IRS to prove that you're only doing this for a hobby and not for, to shift the burden of proof back to the IRS to tell you that this is a hobby, right? Not a business. So final thoughts. Establishing a profit motive is the most important thing you can do, especially after TCJA, because none of the expenses related to generating income are deductible now. Only the income. So you're taking on you're taking on the whole boat, right? If you're not going to establish this profit motive, you're taking on the whole boat of all of the income, and that's going to be taxable now. when you're establishing a fact pattern for your profit motive, generally it follows the basic guidance that I give to all of my clients, or if you've read any of my stuff on Quora, if you've read my blogs, if you've seen previous videos, if it generally follows all of that same guidance as to how you can make your business better, well, that same guidance also applies to establishing a profit motive and getting you over that hump of this is not a hobby, this is a for-profit business venture. So it's all the same stuff. Separate bank accounts, have the proper accounting software. I write about that ad nauseum on Quora. Run things in a more organized way. That will help you establish that profit motive. So that's it for me. High level, you cannot deduct losses from hobbies. You cannot deduct expenses from hobbies. Do your best to establish that this is a business and that this has a profit motive attached to it. That's it. Okay. That's really it for me this time. So let's connect. Chris@BetterWayCPA.com. That's the email address. 843-608-0298. That is the phone number. You can find me on Facebook, LinkedIn, Twitter, Quora, Instagram, and Pinterest. I am all over the place. Please just connect with me. I'd love to chat about your particular situation and try to help you out as best as I can. So that's it for me. I look forward to seeing you next week.